Welcome traders to this new video, which is about charge, which means change of character. We're going to go over the definition, we're going to explain where we're going to use it, the overall context where this is important, and then we're going to go on the charts and we're going to look at some examples. Now, very quick, the definition is a high, then a low, or a low, then a high, get taken. Okay, so the liquidity will be swept and the wicks are valid. Very easy. So let me just explain it to you on this example. So here in this case, you see here a low and here a high. And what the market is doing, it's taking out the low. And if it will just wick a little bit below it, then it is valid. Then the price is moving up higher and it's taking out the high. So within these movements, you're taking out buyers and sellers. Okay, that's super important because this is our overall strategy. So we're always waiting that 99% of the traders will get a stop loss hit. And then we are going to get into this market because this is what smart money at the end does. Now, these smart money concept traders are also going to fail this trade because they don't get this mentality behind it. They're just following patterns, And what we're doing here, guys, is we're following charge because charge is super powerful. As you can see within these two movements, buyers and sellers are out of the market. And this is super important that you understand this fact. Now, what we're going to do in addition is, the idea is that after price has taken here the low and the high, we would like to see price moving down to the new created demand zone. And there we're going to look for our entry. This here is the 1 minute time frame. Okay, the 1 minute time frame is where we'll look for this charge. And on the seconds, so 30 seconds, 15 seconds, 5 seconds, we're looking for price to create here liquidity like on any other price action confirmation that we have. And we would like to see price taking this additional liquidity so that it will confirm our demand zone. Okay, so this is the overall idea. Of course, you can look for this charge also only on the seconds. It's also possible. So if you don't see something on the 1 minute, then you can go down lower to the seconds to identify there's something. But I definitely recommend you guys to stay on the 1 minute and to only execute it on the 1 minute, because the seconds can be sometimes a little bit difficult, especially if you're a beginner here. Then I don't recommend you to go straight to the charts and to open the seconds. Only do the seconds at the moment when you really do not see anything on the 1 minute, because sometimes that's the case. Sometimes the market is so volatile, so it will go without you. But if you're looking on the seconds, you will view there the options as well. Okay, pretty easy, right? Let's go here to the opposite direction. So you can see here, price is moving up, down, and here you got your high and your low, and you can see how the high is getting taken out, then it's taken out the low, and therefore you got again 99% of the traders out of this market. And then we are going to look and we're understanding what the seconds are doing. And we see, yes, beautiful, there's a source of liquidity. This is a new created supply zone. Let's get it into the supply zone, and there we get our entry. And what I need to say an addition is that you don't need to go to the seconds. Okay, it's not always necessary. I always, or most of the times, I stay only on the 1 minute because I can see on the 1 minute already my liquidity that I have. Okay, it's printed there as well. So you don't need always to go to the seconds. So that's it. That's charge. Now, important for us is now, where are we going to use charge? Well, actually, you need to have here the bigger picture. Okay, so you need to have, for instance, bearish structure on the 4 hours. You need to be in a 4-hour supply zone or in a daily supply zone. And there you start to refine your zones. Very important is that you are going to refine everything and you're going to break down everything to the 1 minute time frame, so that this whole chart example that you see here or here should be at a 1 minute refined zone where you would like to take your entry. Okay, so the exact same procedure like you're using for our price action confirmation type of styles, you need to use it here as well. And you're waiting for that one refined 1 minute supply zone, that this kind of thing, or demand zone, that this kind of charge will occur, and then you're going to execute it, and that's it. Okay, plus in addition, guys, the price can easily wick a little bit above liquidity, and there you can use it as well. Okay, so for instance, you got Asia liquidity, and Asia liquidity is getting taken out, and then you have this kind of pattern or this kind of pattern, then you can execute it as well. Okay, so it's a super powerful trade, powerful concept. Now I would say we're going to go over some examples, and here on GU I'm starting with the daily time frame where we can spot this supply zone. Then I can see here pretty nice liquidity, which can help us to see the price dropping very soon. On the 4-hour time frames, we need to refine everything. Okay, guys, so this is the way on how we're doing. So we're always refining everything step by step, and we're using, of course, structure in our advantage. Here in this case, this is still a valid supply zone on the 4-hour time frame, and the next refinement will be potentially somewhere there. So it would just need some more time till the price will come up there. So the 4 hours is not interesting for us. The only thing which is interesting for us from the 4-hour time frame is that we are in a liquidity spot as we take out this lower high, and we're into this supply zone right now. So I'm switching down to the minute 15, and I'm going to analyze structure. Here, by analyzing structure, let me just remove the liquidity. Here, the supply zone, we know we're in the supply zone, but here you can see that we are in a bullish range, super important, which means price is still bullish. And price has broken this previous structure, so this is why it is confirmed to be bullish. Now, if you analyze it the right way with chart, what you will see here is this, that the price has taken out this high and this low. Okay, so a chart is indicating us right now a change of character, so that the price will probably change very soon, and we need to assume this opportunity. In this case, on a minute 15 time frame, it's not relevant for us to take an entry because it's just way too big, so we would like to take our entries on the minute 1. But what the minute 15 chart can indicate us is that the price is about to shift, and this is very good to use your chart. In this case, what you will see is that you have here a BOS as well. Now, the BOS is not that fast as chart, because this is the structure, but the structure was not valid here. It just wicked below it, and here it's the first time when it really broke below it. Still, the structure is part of a bigger bullish structure, so it's not relevant right now if the price will really shift. Okay, but also this BOS is right now a good confirmation that the price will probably go short very soon, and the chart is indicating us this kind of thing already a little bit earlier. Okay, now the idea is very simply, price should come a little bit higher, to take this liquidity, probably taking even here something on the lower time frame. We will see very soon, and then that we should go for a nice short. That's it, till this area, because this is our range, so price could easily go down till this range. So I'm switching right to the minute 5, and I'm going to start analyzing my supply demand zones, And what I can see here, okay, this is not interesting for me because this is not add-on extreme, you know, so it's not even in premium and discount. This is something which I'm not interested in. But the first time I'm interested is around this area and around this, you know. You got here two nice supply zones. I don't really like this one because here the imbalance is not really given, as you can see. So price already has met here the low and the high, the 2 wicks. So probably this is not the best supply zone. So I'm going then to the minute one, and then the minute one I'm just refining everything. So here in the top, very clear, this is my supply zone on the minute one. And here, if I'm looking here for a supply zone, it could be difficult because here this one could work out, but no liquidity, you know, so there's no liquidity, which will give me here any kind of additional confirmation. This one is already mitigated, and this one has here also mitigation. Okay, so for me, this is just liquidity, which can be used to come up till that one. And this is the way how you really need to do it. So you need to pick up really the high point interest for our charge confirmation, because I'm not sure right now, will this work or not? It's good because, yes, of course, look at this, it took out this liquidity. It's definitely something there, but still I would like to confirm it in addition with a charge. So right now the idea is, let's wait till the price will came back up and let's see how it will react. So right now we are here at these supply zones, okay? You can see they will not work really because here, okay, gave us a bit of reaction, but these levels are just mitigated, okay? And boom, here it starts to drop down at the supply zone, and this is why here I would never monetize price action, as it's not relevant for us. You know, it's not a high powerful supply zone. Of course, you can use even here charge and you can go for a quick trade, for instance. But let me just introduce you how it really works. Here, you know, so price is coming back up because this is just liquidity. This is additional liquidity. These are relative equal highs. And now I'm interested in what the price is doing. So look here. Price has broken here, so has made here the first charge, and the idea is right now to wait here for the second charge. So you got here kind of a big range, you know, which we need to wait until we're going to confirm our entry. Now I'm just waiting, you know, price, boom, charge is valid. At this point, I know price is bearish, and of course the first idea would have been just here a risk type of entry because you got equal highs, then this is easy possible. So definitely a high quality entry over there. So in this video you see pretty nice example on how to use risk type of entry. But here what we see is liquidity. So I don't even need to go right now to the seconds. It's not relevant because I can see here pretty easy my liquidity, and what I can see here is my created supply zone, which I can completely refine because I know this liquidity needs to be taken out. So I can refine it, for instance, like this. And then I'm just placing here my sell limit. And I'm good to go. That's my trade. Now let's see how it will play out. Boom, price came to it, is taking it out, and go. Let's just drop to the downside. So it's a very powerful tool. For instance, look at this, very easy 10R, 20R. You can just let it open, you know, till it makes sense from a structure perspective. In this case, here is liquidity. I would definitely look here somewhere for a close, or if you're very risky, you can use it till the next structural point. So it really depends on how you're defining your rules. But this is a perfect example on how to take a trade. Now that we've seen this, let's delete everything and let's see what the price will do. So look at this, it's just going down and down and down. And what we can see here from a minute 15 perspective is price has broken against structure. So right now it's really bearish. It completely shifts. We're in this high liquidity area on the 4-hour time frame, and this is right now our new range, so it is a bearish range. Then what we can expect here is the price can go all the way back up. Here we got liquidity, and we're going to the minute 5 and minute 1 to refine something, okay, to check out some supply zones, for instance this one. And then we're going to the minute 1, and completely fine. We can use it like this. So this is completely fine. So we got here, you know, price is taken out here, liquidity. So this is definitely overall a big supply zone. So supply zone doesn't need always to be just a very refined POI. And here we can use, for instance, charge pretty good. Okay, so if price will return to this area, we're going to use again charge. So let's see what price will do. So it's coming all the way back up perfectly. So here it already tapped into it. So let me just go a little bit to the back here. Okay, so we got there our M1 supply zone, and right now we're just waiting, or no, we're just waiting for our valid charge, and there it is. It's already here. First, price made here this charge, this change of character. Here, change of character. And what we're waiting for currently is price to come back into the supply zone so that we can go sell. Perfectly. Creating your additional liquidity to take it out. And boom, tapped into the supply zone. And it's dropping. It's very easy. So you can see right now, you can sometimes minimize it. Sometimes it's not the best. So what you can do is, of course, when you see something like this, you will always see prices creating these kind of supply chains, you know. So price will just move step by step to the downside. And you can just use here additional charge to confirm your entry. So let me show you that. So sorry, that was charge down. What you can see, that was the liquidity. So look at this here again, relative equal highs. Pretty good. And here, supply chain. After price did what? Here, charge. And you can play this game the whole time, you know. You just need to be aware of one important thing, and that's the supply chain, okay? Because price can always came all the way back up. Now in this case, it doesn't, because of one important factor. It's everything here is mitigated, okay? So you really start here, and if you look everything all the way from top, you can see that everything here is fully mitigated. And this is super important for us. If you would like to use here this charge chain, how I like to call it, this charge chain, then you really need to be aware of everything, you know, that definitely everything above is mitigated and that this is definitely the right direction. And here you can see liquidity, you know, so liquidity and charge, and it's moving down, guys. Okay, here supply chain, you know, they're just connecting with each other with every new created supply. In this case here, you don't have a proper charge, so would not be for me right now on valid entry. But here again, supply, and here you can definitely use again charge here. So charge and this. And so on, you know, you can play that game. So it's a very powerful tool if you know how to use it. Just copying this because there's so many here, guys. Okay, so you charge. Okay, and always check out where liquidity is. This is super important. Never forget about the liquidity. If you don't have the liquidity, then the setup could be already risky. But in most cases, if you have something like this, you will have your liquidity confirmation. Look at this. Everything is going to be taken out by the pip. Everything is perfect. Here again, so it's occurring all the time. That's really just crazy. So very powerful tool. Here, charge. Then you can use this new supply, you know, here in this case, plus you had the liquidity from this right over there. Okay, so these minimalistic candles right over there are liquidity. And boom, here again, charge. Liquidity there, and price is moving and moving. Okay, it's a perfect example on how we use charge. Let me just make here a quick screenshot so you can use it afterwards to reflect it. Very important thing. Okay, then I'm going to go over one more example in this video. And this will be right over there. Just want to share with you here a few examples so that you are aware of how we're going to use this. So here is the perfect example. So you can see here minute 15 time frame. Okay, so always starting with the higher time frames, you would like to have everything into your direction. Okay, so you don't want to see price is here in this case super bullish, you know, and you're going against the overall direction and so on. No, we would like to have here the most confirmation possible, but keep in mind whenever you have on target which the price should reach, okay, because there are equal lows, equal highs or something like that, then you can use this kind of entry style to get into that direction. Of course, in this case, because of this example which we made, price did a BOS. Where was the BOS? Not there. The BOS was after that. So here is the real BOS, but it validated that we broke this higher low. Okay, so you are here since then in a bearish range. So 4 hours are bearish. This is good. If you would like to go for shorts, that's good. And then you go to the minute 15 to understand where minute 15 is. And minute 15 is still bearish. You can see here, this is the range of minute 15. So idea is currently the price should come somewhere here, okay, at an unmitigated supply zone, and then we would like to see prices moving down. So in this case, there is the supply zone, okay, and we can refine it to the wicks, or we go straight to the minute 5 to see if there is something. Yes, you can see here the same kind of thing, the supply, or you're using the wicks. Everything is good. Minute 1 allows us to stay there. Okay, this is the last up candle which took here pretty nice the liquidity. Okay, so this is how you get your high quality setups here. Perfect. So we're just waiting, guys. There's no need that we will go here in some of these supplies because these supply zones are all already mitigated. You can see this. You can see this one, this one, this one. You know, everything is fully mitigated, which means for us, it's liquidity. So if price will go bullish here, so I'm not interested in going right now really into a long. It's just too risky because price is just moving down. So I would not even look here for longs, but I will look for a short around that area over there. So let's look what the price is doing and how we're going to take it if it will come back up. So interesting. Price is taking out here liquidity, so keep that in mind to not get trapped. Always wait till the price will really hit your POIs. Otherwise, you are not interested in getting involved. Okay, and now we're coming closer and closer. And that's the point. This is where price came into it. And this is interesting right now, because if you would have been taken here this as a risk type of entry, okay, because you acknowledge, yes, there is liquidity, so relative equal highs, something like this, you can take that entry. In this case, I would not even take that risk type of entry. Why? Because you just don't have enough liquidity just above as below that supply. Okay, so it could be risky from my point of view. What's the best thing is to just wait when the price will hit it, and you wait for that charge, and that's it. And then you can fully validate your entry type of style. So here in this case, look at this. This is our charge. Okay, taken out where price moved up crazy. In this case, this is an even powerful one. Why? Because it took out these ones as well. Okay, so it's a powerful charge. And here on the downside. Okay, now it's valid for me. This is the new supply here. And we're waiting for price to come back to it so that we can take our nice entry. Okay. Here in this case, what you can see is price is creating liquidity. And here, guys, also don't get impatient. So what I would like to say with that is, don't try to hurry right now on any kind of setups just because price is dropping. Because this is what the market wants you to think of, that you will miss on this trade and that you will just, yeah, okay, I'm going to take this supply zone. Let's go. No, it doesn't make sense because this is an unmitigated supply zone right over there. And we would like to see here a mitigation of it. So we got here additional liquidity for it. Why is it even a pretty good liquidity? Because look at this supply chain, you know, so it's just additional liquidity. These two are already combined with each other. So I'm waiting, guys. I'm just waiting for price to come up higher, and boom, this is my entry. There I am in. This is my sell limit, which I place over there, and I'm fine with it. In this case, not the best stop loss. Okay, it's 2 pips. Okay, I would like to go for a 1 pip if it's possible. Sometimes you will get it, sometimes not. It's not a problem, but 2 pips is still good. And now look at this. We're going to play the same game. We know right now we are at the top of the range. So if price will go above it, everything will be invalid. Okay, so I will look right now for additional confirmations for my shorts. And what I can see here is a new potential charge. You know, so I'm using this. I'm using that. And we're waiting. Boom. Charge. Where are I'm going right now to put my next sell limit order? Pretty simple. Look at this. You got this supply zone. And you got here a supply zone. But this one is already mitigated. So I'm not interested in an already mitigated supply zone. No, of course not. What I'm going to do is I'm going to use the next potential supply zone, and this is not this one because this one is mitigated as well. I'm going to use this one. This is not mitigated yet, okay? So this is still a fresh level of supply, and I'm going to wait for price to tap into it, and I'm going to use then my entry. Boom, that's my entry, and I'm in this supply zone. Yeah. And then we're going to push lower and lower and lower. And then sometimes this will occur. This is a pretty good example. Price will came all the way back up. And now look at this. And this is why it's so powerful to understand mitigation. This is okay. So this one here is mitigated. This one over there is also mitigated. This is mitigated. So what we mapped out already. This one here, we took our entry there. We mitigated only 50% of it. Okay, so the other half is still available. Plus, it's a very big candle. Plus, it's around 9 o'clock, which is London open. So there is a lot of pressure in the market, guys. Okay, so keep that in mind. London is always creating big pressure in the market. So this is something which you also need to acknowledge. And in this case, where would you take your entries? this is not possible. So if you're looking here for additional charge or anything in that nature, you cannot even take that entry because it's not valid. It's already mitigated right over there. Okay, so this one is still a valid one for us. So this is why I'm not a big fan of putting stop loss to entry, because I'm just going to lose so many possibilities. I mean, the first one is still valid. Okay, my sell limit from there is still there, but this one I would just lost it, you know. Now, what we can do is, especially after price did that, it's just pretty good because it broke structure, you know. So it's confirming overall the downtrend. So it broke here some structure, which is also, you can see it pretty good on the minute 5, you know, pretty good structure, which was broken. So it's confirming the downtrend. And what you can see here is charge, okay, potential charge. So let's have a look what the price will do. Boom, has broken the other side, so charge is valid. So where are we going to get our entry? Well, very easy. This is the highest supply zone. This is also a good supply zone, but this one here is not mitigated. So it means this is just liquidity for us. So I would never use that one, okay? So this is where I'm going to put my sell limit for my charge. It's always the extreme. And you need to understand, not always the extreme, sorry, but it's the unmitigated extreme plus if you got liquidity, and we would like to have liquidity for our setups. So this is where I'm going to look for my next potential entry on this. And then price is moving, respecting it, you know, it's respecting that one. So I'm not saying that they do not work, but are they going to work always properly? I guess not. And this is the truth, because price will just move up higher, taking out these equal highs right now. Okay, so triple highs here. So let's go. That is my sell limit. And then we're playing this game again and again and again. It's pretty amusing. So here again, you had charge up and charge down, and then you got here your supply zone, and that would be your next entry. And as you can see, price is moving. Okay, so crazy, really crazy. So what kind of potential you have here on these trades is really phenomenal. Something around 2 pips stop loss on every single setup. So this one would be still valid. This one is valid. This one is valid. So if you're perfecting your knowledge of supply demand, charge, everything in combination, you can really make here serious risk reward. I mean, look at this, just here for these small movements on every single trade, average 10R, 40R with just here 20 pips, guys, with 20 pips, just by understanding what charge is really about. So definitely a very powerful tool, definitely a very advanced tool, which you need to understand how to use it properly by really understanding structure, supply, demand, liquidity, and everything. Okay, so thanks for watching, guys. Go to the charts, apply it, and enjoy it.